Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
Is this company worth investing in? If you've asked yourself this question before, you've come to the right place. Welcome to Financial Audit on WangHiro, where we guide absolute beginners every step of the way in their investing journey. Salene is a Gen Z who started out only putting her money in fixed deposits. Since joining our series though, she has learned the different types of asset classes, how to source for market information, and even opened her own brokerage account on Afin Huang. In the last episode, we guided Salene through the process of analyzing Tenaga Nasional for its investing potential. If you're interested to look at any of these videos related to Salene's investing journey, I've included a link to the playlist in the description below. So, welcome back to the show again, Salene.
Hi.
So from electricity, she wants to buy cars now, Louis.
It's a good segue, actually.
It's a good segue, yeah. So the stock that you have picked today is actually Sime Darby, right?
Yeah.
Salene? What piqued your interest to look at Sime Darby actually?
My friend always remind me, Sime Darby, Sime Darby. Whenever I go KL and meet her, she say, oh, my house is near Sime Darby.
Yeah, I mean they are a very big conglomerate. They used to do everything, but most recently they actually split their plantation, their property division. They also their healthcare. Yeah, so now but you're specifically still referring to the original parent group, right?
Yes.
Okay, so maybe share with us based on the 4 questions that we normally ask. What do they do and how do they make money?
They invest in different industry. Mostly it's like industrial, where they sell machineries like the caterpillars, the trucks and everything. And then they are into motors like cars. BMW is under them. Porsche, like the electric car, the
BYD, yeah.
Is also under them. And then they also have healthcare. They got hospitals around Malaysia, if I'm not mistaken.
Yeah.
Few places.
Yeah. So they, in a way, what you're saying is it's quite a diversified business, very, very diversified lah. Okay, cool. How do they make money from these different divisions, maybe?
They are the parent company, maybe. I'm not so sure. Maybe they through investment, like invest in their subsidiaries. When the subsidiaries making money, maybe in return is like dividend or maybe that's their income.
Okay. Where do you think would be a good source to like dig further and to read up about Sime Darby actually?
Sime Darby, based on the research I did, I mostly get more of the information from their website, like what they do, like what hospital, things like that. Like even the type of car they sell also, I got it from their website.
Okay, so let's see how good their website is, huh? Sime Darby. Okay, so the color looks, very standardized color. So who are we? Who we are? Okay, mission, the international, wow, very, very big. Global presence, 22,000 employees, 17 countries, okay. So they used to do, view our history. So actually, which part of the website that you think that gave you the most information actually?
I randomly browse through as I read. So it's
see.
like, you won't know specifically where you read the...
Yeah. Actually, the best place to start is this place called the Investor Relations. If you see over here.
Yeah.
Investor Relations. You go to Investor Center. I know it's a bit small on the screen. Investor Center. And then from here, usually you get what we call a snapshot of everything here. Yeah. So you see the latest press release, the investor calendar. That means when do they announce the results, annual report. If you want to know the business, usually is you go to this thing called Our Companies and you go to All Industries. So from here, straight away, one shot you can see you got industrial, you got motor, you got healthcare, like what you said, and other businesses. Okay. So from here, you can't really see what's the breakdown. So where do you think would be my next best place for your next best place to go to actually read in more detail?
Bursa Malaysia.
Bursa Malaysia or the annual report lah.
Yeah.
Okay, so the annual report, I've opened it here. So there's a lot of mumbo jumbo here. Sorry, I straight away. What I like is I like to scroll at this because it's so long. So what I'm looking for is like, can I have one page that has an overview of everything? And usually you scroll down, you see something like this. They will have to provide something like a corporate structure. So this is where I look for. So you can see, I asked the question about what do they do and how do they make money. So there's an industrial. You say they sell industrial Caterpillar machines and all that. Their motor division, their healthcare division, which is they own only 50%. Okay, 50%. That means there's another partner. And I'm guessing this is Ramsey because it's called Ramsey Sime Darby Healthcare. Okay. And there's others. So they do insurance brokerage. Interesting. I never knew. I never studied. I never liked conglomerates, Salene and Louis, because
They want to do everything, right?
precisely. And what is tough for me to assess is this Louis and Salene. If I look at the margin, how do I know that margin is contributed more from the healthcare division or the motor or the industries? Because you see, if I'm making 50% on my healthcare, for example, but then my motor is only making like 5%, what we see in the consolidated number is actually an aggregate of all these, you see. So because of that, then how do I know whether on average, is my average of like 5% or 10% of my total business a good thing or a bad thing? I don't know. I have to break down. And if they don't break it down in the financial report or the financial statements that this particular healthcare division is like profitable or not, then it becomes very hard for me to assess, you see. That's why conglomerates, I hardly invest, except for one or two lah. yeah, one or two that is in Malaysia. Okay, so which part attracts you the most, Salene?
The industrial.
Industrials. Okay, why?
Because I work in a construction company, so I know how much you buy one machine, how it costs and everything.
Nice. You see, again, very good example, using your circle of competence. Okay, so how often, since you're in this construction company, how often do a company actually replace their machinery, especially like a Caterpillar tractor? How often?
Not often. Like
Once
few
every
years,
5
once.
years? Once every 10 years?
Should be around there.
Okay.
Once every 5 years.
Once every 5 years, huh? Okay, cool. So now looking at this, I know they have, like what you said, they have BMW, they have Porsche, they have Caterpillar. Oh, Rolls-Royce also. Wow, okay. Okay, then BYD and EV. Okay, the Taycan. I know like Porsche contributes quite a lot to them, right? So now let's look at the numbers. Okay, coming back here. Second question, are they profitable or financially stable doing up? Okay, so Sime Darby. Okay, I hope this is the one for once. Yeah, Sime Darby Berhad. Okay. So Salene, take us through the numbers. 2022, how much they make?
2022, they make around 11.29 billion
Net
in
income, right?
Revenue. Net income around 389 million.
Are we on the same company? Is it 4197? Let me see. Okay, go to ticker. That's the best. Sime Darby. Okay, so I'm going to plot it out here. 42 billion. Is it the same Sime Darby? Because I don't want you to be confused with the other one. No?
I see through Google Finance the income statement. Oh, I see in the quarterly. 1.1 B net income in 2022.
1.1 B. Yes, that's correct. Okay, over here. So I'm using two sources here, Yahoo Finance, and also on ticker. Yeah, 2022. Let me show labels. Yep, 1.1B. Okay. So they're profitable? Are they profitable?
Yeah, they're profitable.
Yeah. Now, let me ask you, I look at this, what do you see when you see the blue bar so high but the black bar so low? Good or bad?
Bad,
Good answer. Why?
because they have high costs,
Yes, high cost means margins are compressed.
lower.
Yes. So you look at it, what happened? I look at this, you see once you plot it, right? You look at the margins. Is it coming down? Yeah. Gross margins is 2.88%. Net operating margins, let's see, operating margins. Oh gosh, operating margins, okay, high single digits, no, low single digits. You're talking about 3 to 4%. Now, as a business, you like to run businesses like this or not? 4%, 3% kind of margins.
Very risky.
Revenue very big, 42, 48 billion. Hard margins like, wow, gross margin so low. Hmm. You wonder, right? You thought selling for shares and everything would be good, right?
Yeah.
Okay. Now, what about cash flow? What about cash flow? Let me see. Not bad. Net income of 1.4. You've got cash flow about 1 billion. Okay, about 1 billion. Now, so second question answered, profitable. They are profitable, financially stable. What about balance sheet? Do they owe a lot of money or not, Salene?
Yeah, I saw they have like high liability.
Okay, so let's look at the balance sheet. Let's look at the balance sheet. So total cash and short term, you've got about 3 billion. Okay. Liabilities wise, wow, quite high.
Yeah.
Out of these liabilities, what is the highest? Current liabilities is about 11 billion. Long-term debt, capital leases, okay, not one that really stands out. Accounts payable, what they owe the supplier. Current portion of long-term debt, unearned revenue current. Okay, so a bit of everything lah. Accrued expenses, account payable, short-term borrowing, long-term borrowing. Yeah. Okay. Okay. So next question. Who is their audience and how big can this guy grow? Who is the audience? Who do you think Sime Darby will love to sell to?
Construction
Construction
companies.
companies. Okay. What about their car division?
Higher earning.
Yeah, higher earners, right? Because
Yeah.
they're not selling the cheap cars, right? They're selling the Porsches, the BMWs, the what do you call it?
The more luxury cars.
Correct. So M40 to B40, not B40, M40 to T20 kind of range.
Range.
Okay. How big do you think they can grow?
Not really big based on the reports.
Okay. Remember earlier I asked you a question how often people replace machinery, like once every 5 years, right? How do you think you want to check whether they're actually growing their industrials or not? How to check?
This one I'm not so sure.
Okay. One thing you can do is actually you can check whether they disclose the units being sold or not.
Oh.
Okay. So they have only one. This one way to find, or the other way is to read lah. Read the whole thing lah. Unit. There, you see? EV accounted for 9% of the global car with more than 6.6 million sold worldwide. So this is not their sales. China remains the dominant. Okay. Group mainly serves premium where high touch a prerequisite. So do they break down the unit being sold or not? This is the question that you have to ask. So units, wow, 200. You have to go through a report and find last year how many cars they sold, this year how many cars they sell. Is it a growing trend? Because the world may be growing, the trend may be growing, but are they growing? Correct or not?
Yeah.
Yeah. Even let's say they are Caterpillar tractors or whatsoever, are they growing or not? in terms of units. It's like if you were imagine this as an ice cream shop, you want to know whether chocolate cones or strawberry flavored cones are selling more. Ma. So in order for you to decide whether the audience is actually coming back or growing, then you have to see what we call the units being sold. Yeah. In the interest of time, we won't go through one by one now, but this is the technique. Okay. Now, are they cheap or expensive? What do you think? Sime Darby. Either do this and get the PE here, okay, about 11 times. Oh, dividend about 6% or Salene? How?
Yeah, lor. We
Yeah,
cannot only see dividend. Right?
Oh, only see dividend. Okay. Let's compare them now. Who? Sime Darby. Oh, I had it just now. Sime. Okay. Who do you think will be a good comparison in Malaysia?
I saw Sime Darby competitor is Genting.
Genting. Why do you think Genting? Do you think Genting is a good comparison or not?
Not really.
Okay, why?
Because I feel like Genting is not as big.
Or it may be as big, but are the businesses similar or not?
That one I'm not so sure because I briefly Google through who are Sime Darby competitors. I saw like Genting perhaps.
Okay. So let's just see Sime Darby competitors. So you got Genting, you got UMW, which they just bought, IOI, and Tanchong. Now, we just mentioned what is the business of Sime Darby. They have industrials, they have a motor division. Okay, what was the third division they had? Healthcare, right? Okay, and the fourth one was other businesses, which is like insurance and all that, right? Now, let's go through them one by one and make a comparison. So just for the audience, you've got industrial, motor, healthcare, others. Okay. Genting, what's the business? Casino, resorts. Okay. Do they have a healthcare division?
That I'm not so sure.
Yeah. I don't think so. I'm also not sure, but I don't think so. They're trying to go into healthcare. Hoa Genting, okay, they're trying to go into. So they said Genting medical R&D investments, but do they have like a healthcare center as a business? I don't think so. From there, you have to check from the annual report lah. But from what I've read, I don't think so. Okay, next. Sime Darby has a motor division. Does Genting sell cars or not?
I don't think so.
Yeah, see? So again, while on Google it may state that it is a competitor comparison, how would you evaluate apple to apple? Sime Darby doesn't have a hotel and casino business. So out of the question already. Okay. Now, UMW has a motor division, car division, also sell industrial machinery. That may be a more
better comparison.
Correct. But even then, they also don't have a healthcare division. You see? So again, that's why conglomerates for me, I hardly try to spend my time analyzing because it's different moving parts. And unless they break down all these details for me, then only I can compare like this business against this business against this business. You see what I mean?
Yeah. So you cannot like have a specific competitors. Like you cannot compare as soon as possible.
Yeah. Actually, I would say like, let's say Genting, I would rather compare them with YTL. YTL has a hotels, Think about it. YTL Star Hill belongs to them. The Westin, JW Marriott, all this belongs to them. But even then, they park it into a REIT. But at least they are closer because, like, Sime Darby doesn't have hotels, You see, they may have a convention center or that kind of thing, but I don't think it's as big as the other divisions of the business. You see, so you see the amount of time you need to go and read to understand all this landscape. Yeah. Okay, so they said Tanchong is also a competitor. Tanchong is the guy that makes the Nissan cars. Tanchong Motor. There's this. It says Tanchong International, but in Malaysia it's known as Tanchong Motors. All Nissan cars are made by them in Malaysia. So that's why they try to compare against Sime Darby, because Sime Darby has a motor division. Then IOI they also have property. They also have palm oil plantation, but I don't think they have a car division, and I don't think they have a healthcare division as well. So you see, so you got to spend time like reading each.
Like compared to multiples
Correct. By the
companies.
multiples again. Yeah,
Yeah.
yeah. So now how? Sime Darby can buy.
Risky.
In Sarawak, me and Louis, we are also used to conglomerates like the Rimbunan Hijau Group, the Samling Group. You know, they but not as diverse as these guys lah. I don't think they like we have conglomerates run by old families in Sarawak, but they're not as diverse. They don't have like car and everything lah. Yeah. So sometimes you specialize is good. When you like serve everyone, it's a bit of a headache. Now how am I going to compare, right? Yeah. So you have any questions, Salene?
I got one question in mind, but I think I forgot about it.
Okay. If you do remember, post it on Facebook and tag, and then we can answer it. You know. So yeah.
Yeah, I remember already. Okay, it's a conglomerate, but I don't know how they specifically earn. They invest based on their investment, is it, in subsidiaries?
Okay. Good question. So your question is more about the company structure and the earnings. So you see here, right? You know the different tiers of subsidiary, associate, JV, right? Maybe you want to explain to the audience what's the difference? Because this one, even for me, like what I said, I'm a 6:30 accountant. I just discovered this like 5-6 years ago only, you know. Maybe you want to describe to the audience how is it known as a subsidiary? How is it known as an associate? How is it known as a JV?
Subsidiaries is basically like you have a majority control over the companies. So basically you can control their activities. Associate is basically you have a tiny percentage in them, but you cannot really control them. JV is joint venture. Basically, you have 50-50 with another company to join into different companies or anything like that.
Yeah. Okay, cool. I add on to that. So if you look at this chart, 100% industrial holdings in Neighborhood. So that's why when you see some report, they say it's a wholly owned subsidiary because 100% under the Sime Darby Group. Okay. Then you see 50% Sime Darby Ramsey Healthcare. Okay. This may be a subsidiary or maybe a associate. We don't know. Like what you said, is Sime Darby in control? My guess is it looks like they are in control. So it's still known as a subsidiary. But because they only own 50%, it means 50% of this earnings is recognized at the group level, not 100%, because they only own 50. Then associate, like what you pointed out, is like they may own 30%. They are not the controlling stakeholders. They may be on the board, but they're not controlling. They have an associate stake. If it's like 30%, then only 30% of the earnings will be recognized at the group level. So that's why as a conglomerate, you have to understand the shareholding structure of the wholly owned subsidiaries, or associate, or even JV. JV may not even be 50-50, you know. JV is they may not even hold a company. They just JV on one particular project, and that JV structure, whatever the JV percentage is, only then it comes back. They may not even own. That's why sometimes you see this thing called special purpose vehicle, SPV. This is sometimes why they create it for JVs. That after the project finish,
then they disband the JV.
Just disabandon the whole thing already. Am I making sense, Salene?
Yeah.
Yeah. So I hope I answered your question.
No.
So your question was again?
I know they recognize earning in their subsidiary, but how is it theirs, you know?
How is it theirs? Because they control the company, they fork out capital, and they run the operations of the business.
So in return, they get the return in form of dividend?
Okay. Now I see your question. Okay, yes. They either can get it in the form of dividend, okay, or usually it's in the form of dividend. In the form of dividend, because it's a cash payout directly to the holding
shareholders.
Company. Yeah, the holding company, we call it. Sometimes I've not usually the cleanest way is through a dividend. Some ways I've seen is like profit recognition, lor, but you still have to move the money back to holding. Lah. The best is still dividends at subsidiary level that you pay out. Yeah. Like Berkshire Hathaway, they own about 10% of Apple because it's not a subsidiary, it's a investment stake. The best way for them to recognize that investment income is actually through a dividend.
Oh.
Yeah. That's why Buffett, he would prefer that if he invests in a company like Coca-Cola, how he can realize the income is actually through dividend. Whereas if he cannot recognize it through a dividend, then he will buy the whole stake. Like BYD, I don't know how much BYD is paying dividend. He used to have a substantial stake in BYD. Dividend is quite low. Lah. Yeah, 28 times dividend is only 0.48. Yeah. So in this case, then maybe they have to make some sort of an arrangement, like a profit guarantee. They pay out certain amount. It goes case by case, but the cleanest way is still dividend. And sometimes they also do this thing called sharing of costs, because some of these subsidiaries, they have their own support functions, HR, sales and marketing, whatever, right? Then they can bill it on the subsidiary level, or they are back charged from the group. That means the group will provide all the support, HR, finance, whatever. Then the group will actually charge the subsidiaries the support function. That's another way of recognizing profit.
Like basically their sales.
Correct. So virtually I have all this. Then there's another way. Sorry, one more way. Royalty. That means the parent company hold a royalty of a brand, of an IP or something, and then they charge. So like 7-Eleven, the holding company will have the brand. And then each of the outlets, they actually have to pay a brand expense back to the holding company. Many ways, actually. Many ways. That's why I was a bit stunned when you asked that question. Yeah. Many ways.
So that wraps up today's episode of Financial Audit. So now over to you, our audience. Are you like Salene, someone who is thinking about buying your first stock? What did you think of today's analysis of Sime Darby? Comment below. And if you have some questions about the company, you can ask in the comment section as well. So if you found this episode interesting, do hit like on this video, as it will help us with the YouTube algorithm. And if you want to follow Salene's investing journey, make sure to subscribe to WangHiro. Thanks for tuning in today, and we hope to see you in our next video. Bye-bye.